52 million, milli with an M, million short liquidations, guys. Did you get stopped out? And what does this mean about our future positions? The Forex markets, I don't know if you've noticed, but the Forex markets have absolutely exploded moving into the open last night and coming off today. And I think that's largely related to what's coming out of the Jackson Hole Conference with Bank of England Governor Mark Carney talking about and openly proposing a global cryptocurrency as an alternative to the dollar being the world reserve currency. How did we come to this point, and what does this mean for the dollar moving forward? Meanwhile, Binance launches their own lending platform, allowing individuals to earn passive income on their cryptocurrency deposits. Is it really worth the risk? We're going to break that down and look at the contract specifications, and we're going to break down Bitcoin's price action in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live Monday, August 26th, 2019, your daily source for market updates, sentiment, and news for traders. My name is Justin Wise, lead analyst and senior mentor here at crackingcryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, follow, share, and engage in this wonderful live chat that we have, and make sure to hit the thumbs up button. We highly appreciate the support. Give the blessings to the YouTube algorithm gods. Today's episode of Breaking Bitcoin is brought to you by us. If you are an aspiring trader, if you're new to trading, or if you are an experienced trader looking to sharpen your skills, make sure to check out premium.crackingcryptocurrency.com. Top link in the description below to see all that the premium group can offer to you. Our exclusive trade setups and signals, the proprietary pathways to profit course, our exclusive tools, our spreadsheets, our analytical tools, as well as one-on-one mentorship. Come check it out. Premium.crackingcryptocurrency.com. Link in the description down below. We've got such a fantastic show for you guys today. Such a fantastic show. We're going to get right into it. We've got so much to talk about. I want to thank Friday's crypto comment giveaway winner, MT Coiner. I see you live, sir. Make sure to hit me up in the Discord so I can tip you some crypto. I want to thank this month's crypto comment giveaway sponsor, X42 Protocol. Make sure to check them out at x42.tech. Boom. And here we are. All right. So we're going to click on this button here. 30 potential winners. We're going to randomly pick one winner, and that winner is not me. David Rice. Thank you so much, sir. He says, thanks for showing us all how to kill it correctly. Well, I definitely don't try to teach people how to kill it wrongly. Thank you so much for the support and the comment, my good friend. If you get a hold of me in the Discord, I will tip you some crypto, guys. We give away crypto every single day on this channel. Right now, we're giving away 85 X42 protocol. All right, guys. So we've got so much to talk about. Here are the topics we're going to cover today. Obviously, we're going to do a technical analysis of Bitcoin's price. We're going to talk about what happened over the weekend. We're obviously going to talk about the big liquidation candle. We're going to talk about the follow through on that, where I see the market going, how I'm positioned. We're going to talk about moving your stop loss to break even with a real world example. We're going to talk about a couple questions that I've gotten previously. So those two questions are, if you got a signal from your trading strategy yesterday and it told you to go long, for example, and you're getting another one today, should you increase your risk? We're going to break that down, talk about the nuance. And then we're also going to talk about a question that I get a lot. And this is, if we're short and we get stopped out, how do we set up our trade in such a way that we are hedged after our short trade is completed? So, for example, if you're in a short trade and you get stopped out and now you're long, and then price drops, you've just lost dollars. So how do you protect yourself from that? There are a few easy ways to do it. We're going to show you guys how to calculate what your equity is going to be after your trading loss, and then the correct position size to set up in advance to make sure that you remain hedged. So we're going to cover that. We're also going to cover, obviously, Bitcoin and Ethereum. We're going to briefly touch on altcoins today. Generally, my sentiment right now, and this will make sense after we talk about today's Bitcoin analysis, is I'm not really interested in altcoin exposure right now. There are reversal opportunities on some alts over there on BitMEX. They're quite depressed and at quite a low price, especially on the intraday levels. But in general right now, I do not want any altcoin exposure when I think Bitcoin is gearing up for such a massive move. And we're going to break that down. So let's get right down into it. Good catch, Yagami. Yes, I did put my watch on. Flex on, everyone. Let them know your trades for. Love you, man. Yes, Ken, be careful, man. Talking about making that dollar, dude. You got to be careful about throwing that money around online, man. Make sure you're hiding behind a VPN. And I want to say hello to Who Knew, I See Bitcoin Millionaire, Mr. Hut QC, Roy Coin, Kendi, Human from Earth. We got a lot more. I saw a lot more people. What's going on, guys? MT Coiner, Crypto Beginner, Light Yagami. What's up, my dude? Rudy LaPlane, good to see you back, man. All right. And of course, the one, the only, the man, the myth, the legend, Professor Wally. How are you doing this morning, man? Hopefully you're doing good. All right, guys. Okay, as I said, a lot to talk about. So let's start off with talking about Bitcoin's price. We're gonna this is something that I just want to address with you guys. So we've done different types of analysis on here, and then a while back I started doing more analysis on really my trading strategy and my trading system, and that's very, very helpful to a lot of people who are in the group, who have taken the course, and who understand the way that PTP works, right? They understand that we are trading a system and we are listening to the system because this is a system that we've optimized over time to give us optimum performance, optimum results, optimum signals in the market. And we trade that methodically like a machine. Now, that's going to be very helpful. But as a trader, there are other discretionary aspects that I do look at. And unfortunately, I feel like we haven't talked about those so much. So I want to bring some of that back. I want to talk to you guys a little bit about stuff that I do look at, stuff that I think is relevant, stuff that I think is going to be important, so that I can provide a good, balanced analysis for everybody watching, whether you're in the course and whether you understand the way that I trade and the way that my students trade, or whether you're just watching from home and you want to have good, sound analysis to help supplement your thoughts on the market, right? So I never want the purpose of this show to be you come to this show and I tell you to go long or go short. I don't want that to be the purpose of this channel. I want you guys to be able to apply your own analysis. This is the exact way that I approach my students as well. I don't want to spoon feed you the information, although we do provide trade signals and setups that are profitable. We do that. And that is provided as an opportunity for individuals who are struggling with their trading, who are growing their trading system, because it takes a while to do all the testing, to construct the system, to test your indicators, to put it all together. And having that supplement there to help you have experienced traders showing you their trades, showing you their positions, I think is very, very helpful, especially to newer traders or people. And when I say newer traders, I really do mean anybody who hasn't been trading for at least 5 years, right? Below 5 years, I still consider most of those people in the beginning stages of trading. Just like with any job, you would still be wet behind the ears. You're still getting there, right? Once you hit that 3 to 5 year mark and you've been consistently trading, day in and day out for a year, 2 years, 3 years, well, then you're starting to feel very comfortable in your system, very confident, knowing that you're a consistently profitable trader. And we are all about accelerating that process as much as we can, but doing it correctly, not accelerating in a way that makes it wrong, but accelerating it in a way that makes it more efficient. And I think that by just showing you guys all the mistakes that I've made and showing you guys and providing you the structure of how to construct your system, I think is really, really valuable, because I did not have that when I was learning how to trade, when I was constructing my system. So let's get into that. And I just want to use that as a preface to what we're going to talk about now. So I do want to talk a little bit more about order blocks. I want to talk a little bit more about dynamic support and resistance, about price structure, and then cap that off with what that looks like in the realm of PTP and how you would make a decision based off of that. Okay. So we're on the 2-hour chart here on ByBit, right? And we can see obviously the point of interest, what happened last evening, a little bit shortly after the daily candle close. We just had a massive explosion of buying, right? Now that massive explosion of buying ended just as soon as it began, right? So this happened very, very quickly, right? It was very, very quick price acceleration. We had 52 million. I think the numbers are still kind of pouring in actually, but 52 million at that point in time, short liquidations in a very, very brief period of time. I mean, within seconds. And unfortunately, I was on Twitter last night and I was talking to guys in the group. I was talking to a few other guys in some different Discords as well. And, I saw screenshots of people's order, having people who had their stop loss set at the $10,300 area. I mean, they were getting filled at 10,600. Now, I'm sure this isn't everybody, but this definitely occurred due to slippage. And this is just a really unfortunate situation. BitMEX is really, really terrible about this, and I'm primarily talking about BitMEX because none of this happened on ByBit. I haven't gotten any screenshots from anybody trading on ByBit that had that kind of tomfoolery. And I just think, obviously, we've talked about the benefits and the strengths of ByBit as opposed to BitMEX for a while. And one of them is just the way that their matching engine works. Their matching engine is much faster and more efficient. There's no system overload. And there's really no excuse for BitMEX to continue to have these issues day in and day out. Now, do I still trade on BitMEX? Yes, I do. I do trade altcoins. I do trade a little bit of Bitcoin. Sometimes I'll use, for example, if I'm in a long position on ByBit, sometimes I will use the futures contracts on BitMEX to hedge. So these are things that I do. But in general, I mean, the perpetual swap contract is fraught with peril for situations just like these. Now, okay, so I want to talk about that. So obviously, big, my condolences to people out there who got filled at bad prices. But listen, it just happens sometimes, right? And it's very hard to avoid these situations. There's really not a whole lot you can do unless you want to make the switch and trade on a superior exchange like ByBit. But even then, I mean, I'm sure there's going to be situations and times where some unfortunate things can happen. Slippage is a reality of the markets, right? Slippage is a reality in any market. And if you are a larger trader, if you have a larger position size and there is not enough contracts to execute your stop loss order at market price, you're not going to get filled at that price. It's just a reality. Slippage happens, and it's not market manipulation, and it's not, people are out to get you. It's not always you had your stop loss in the wrong place, right? Now, should these things happen a lot? No, they shouldn't. These things don't happen very frequently at all, especially when you trade the way we trade, more methodical, higher time frames, slower, wider stops, things of this nature. And I think better stop loss placement because our stop losses almost never get triggered because they're not really there to get hit. Stop losses are not there to kick you out of a trade, right? Because if your stop loss is kicking you out of a trade and then price moves in your direction, you're placing your stop loss wrong, right? You're just placing your stop loss wrong. And this is a common problem that people are going to have when they're trading on these lower time frame charts. And that's a big problem. That's a really big problem. And so zooming out and gating your game plan on the higher time frame charts is absolutely essential and really where we start everything with our analysis and how we trade. So anyways, I want to go back to what I was talking about on Friday. I talked about this order block on Friday. So this is where we were on Friday, the last time we spoke here live on the chat. I talked about this is the area to be setting short positions from. Unless we get a nice crack and close above this area, I would definitely be going short from here. I was already in a short, but this is what I talked about. I had plotted out this stop loss right here, and I drew these two green lines as take profit targets. As you can see, that trade worked out to perfection. Hit all those take profit targets. Didn't quite sell the bottom, but again, you grab the meat of the trade and you leave the head and tails for the reversal traders. But it's just a very clean statistical order block setup. I talked about that several times, how I derived those levels. Make sure you guys go back and watch that video on Friday if you want a little bit more clarification on how that works. Now, I want to use those same levels. And transpose that on what we're going to be looking at right now and today. So we're going to go ahead and delete the previous take profit levels because I think those are invalid. And what I have actually done is I'm still in my short position. I actually had some limit orders at 10,600 get filled and add to my short position. So now I have an average entry above price actually. And I'm feeling very comfortable with my trade. But today I am watching the charts a little bit closely because I'm looking for a specific setup. And I posted this earlier to my premium Discord, to all my members, to all my students, and I'm gonna tell you guys and talk to you guys about it as well for those of you who aren't in the premium. So based on what happened last night with price, so this is what happened last night with price, by the way. It was a stop run. I do think especially if we go to the higher time frames, so let's start off, we can really generate these ideas on the weekly. And what I'm going to do is I'm going to pull open our baseline. Make sure the baseline is correct. Yep. All right, so we haven't quite cracked the weekly baseline yet. All right, so I will definitely give you guys that. If we zoom out, and actually let's go over to the Bitstamp chart to talk about this. Let's do the Bitstamp chart for this. Okay, so the Bitstamp chart is starting to look quite bearish to me. Now we are on support, so there is the weekly baseline bounce. These things are a little bit different though when we talk about the weekly levels. So the main thing that stands out to me on the weekly time frame is Wadatar explosion. And if we look, Wadatar explosion really did beautifully set us up for the long trade, really the long swing trade, right? Because this would have given you an entry. Well, Minx gave you the signal to go long right here. Of course, we were below the baseline. So we're looking at this candle, of course, 25th of March, the weekly candle that opened up. And of course, that would have actually got you into the long on the weekly time frame prior to the daily signal, which would have actually the daily got you in the day before the pump on August 1st. So the daily got you in the day before, which is a very special day. March 31st is a very special day in my household. More on that later, or maybe never. Maybe you got to join the household. I don't know. Anyways, So Wadatar explosion is our momentum, or excuse me, it's our volume and confirmation indicator. So it's letting us know that there's enough gas in the tank, and it is also a momentum indicator. Wadatar explosion does not directly measure volume. And it also does not directly measure volatility in the way that people seem to think that it does. It is a momentum indicator, but because of the Bollinger Band aspect of it, because of the rising explosion level, because of the explosion level in general, it does act as a very good stand-in as a volume and volatility indicator. In cryptocurrency, I find that it's much better than a regular volume or volatility indicator. Even though I think those are important to have in your system, the reason that I use Wadatar explosion is because I find that it works better. Now, we could have a very long argument about whether Wadatar explosion is measuring volume and whether we need to be looking at an indicator that measures volume. So we can definitely have that conversation, and I'll just concede on that, because if you guys want to argue nitty-gritty fine points that aren't conducive to making money in the market, that's absolutely fine. That's not what I'm here to do. But my entire argument, my entire point is that when it comes to generating signals, Wadatar explosion just works better than all the other volume indicators that people have shown me. Hands down. That's why I use it. That's why it's part of my system. If you guys, and it's free for you guys to use. If you guys want to go check that out, it's on TradingView. It's a public indicator. You can apply it to your charts. You can use the default settings. You can tweak the settings. tv.crackingcryptocurrency.com. Link in the description below for a list of all our indicators. But we can see that here on the 22nd of July, that weekly candle would have pulled you out of the market. Now, was there a reactionary trade following that? Yes, but you're looking for the big trends right now. As soon as we crack 98.60, if we close the weekly below there, I mean, that is obviously cracking the baseline. And you can see that we have not cracked the baseline since we took off in August. So that is a huge level that I'm definitely watching the weekly chart for that crack of the weekly baseline as well. I think that's absolutely critical to watch for in this market moving forward. Now, going down to the 3-day, we've already closed below the baseline. And again, you can see it a little bit more clearly here. We did shift momentum in Wadatar explosion going all the way back really to the beginning of the middle of July. So the 12th of July is when we did start flipping the 3-day chart bearish. And as you can see, prior to that, Minx is just nothing but green, positive bullish expansion. And then we just start, now we're in this ranging market. I've talked about this. I've talked also about how we're not in a strong trend. We are in a ranging market, but I think that trend is tightening up. And I think we are looking for the break of that trend. And I think the break is going to be to the downside. Everything points to the downside at this point in time. This is definitely still a time in the market when you want to be cautious, but I have definitely got my money where my mouth is, and I am in a short position. Now, but and again, I think everything on the daily agrees with that as well. We've got everything lining up for a bearish trade on the daily as well. Still below the baseline. Wadatar explosion is still bearish. Minx is still bearish. Now, we'll bring up time transformation as well. Now, one thing that I do want to point out though is let's go down to the 2-hour time frame, and I want to point out price structure and what I'm watching for as well. So let's go back to the ByBit chart. So I just wanted to talk and have you guys understand where my bearish bias is coming from on the higher time frames, so that we can go down to the lower time frames and develop a game plan based on what price is looking like. Now, this all comes back to that order block, right? It all comes back to the order block. So as you can see, This yellow line is where so the yellow line right here is where I had previously had the stop loss set for that previous Friday setup right here, the one that played out. That's actually where I re-added to the position. So now I want to point out the next area of interest. Now, this is not really so much an order block, but you can see that it does have good confluence if we scroll back over to the left-hand side of the screen, right? So let's plot that out, and then we'll track its source of origin right here, right? So it's going to be this baby right here. And then we'll track it back in time and see if we can get a good origin of that, right? So you can see the importance right here. You can see the importance right here. You can see the importance right here acting as resistance. And then that resistance is broken. It is back tested as a bullish breaker, right? So again, here's the same structure right here. You have this bearish order block, right? And that bearish order block, I would argue, is most likely generated here and goes all the way back to, really, I mean, we can make the argument that it goes all the way back over to here because this is the first area that we see it tested. Yep, everything is below that. So the first time we see price test this area is on the initial run up, so the 22nd of June. So right toward the end of June when we were still in full bullish expansion mode. And if we properly track that, so I would say, I would now argue that order block is going to be more appropriately right here because this is the last. I mean, I think the argument is better there. But this is the last up candle before a slight shift in market structure. So this is really where we exit bull, we go sideways for a little bit, and we have that last kind of penultimate run up, and then it's nothing but ranging. And if we scroll over to the side, the reason why I like it a little bit tighter is because I just think it's more reflective. I prefer tighter zones. I don't really like extremely wide order blocks. And I think you guys can see how well this area does line up, right? We have resistance here. That resistance is broken, so that becomes a bullish breaker. The bullish breaker is bought up right here. Now you do have pretty wide sweeps grabbing liquidity down below here, so there is two elements to that. But you can see where it holds up. The breaker holds up here. It attempts to hold here. You can see the consolidation. Breaks to the downside. The breaker breaks again back up, right? You can see here price breaks back up above that breaker, and it's bought up here, and it's bought up here, and we have bullish expansion. It is bought up here. We have bullish expansion, and then we come to where we currently are, right? So this is all back where that breaker is, for the most part, acting as bullish support. It has crashed through once. It does act as initial resistance really quick for about 4 hours. It acts as resistance. You can see the rejection from there. Right here, if we zoom in very closely, you can see that right there. But for the most part, this is a level that gets broken to the upside and then acts as the buyback zone, right? It acts as bullish support. But now we come to where we are in the markets right now, which is this break of that bullish breaker, turning it back into a bearish order block. So an order block, if a bearish order block, which is the level of resistance, gets broken to the upside, it becomes a bullish breaker and a buyback zone, right? Once it gets broken back down to the downside, it reverts back to a bearish order block. And you can see how that plays out here, acts as resistance, here, acts as resistance. And now if we zoom forward a little bit more, again, this is generally, obviously, this is, I'm going to be showing you examples of where this doesn't work 100%. I've showed you multiple examples of where it works. Again, there are nuances to trading this specific strategy, but again, this is a strategy that I traded in Forex, in early cryptocurrency. Still look at components of this to this day, which is the concept of order blocks as dynamic support and resistance, and the way that they change and the way that they affect price and liquidity. So right here, we can see the level acts as resistance until it is broken, immediately back tested as a buyback zone. And then over here, again, you can see the same thing. It attempts to get bought up here. The selling pressure is too great. And once that level gets broken, preferably on this candle, I mean, this is clear signs right here. Gives you plenty of time for this short trade right here. And then again, it acts as resistance on the second retest. So now we come to where we are currently on price. Hopefully you guys were able to follow that. Let me know if you have questions. I'll be happy to kind of elucidate on that a little bit more. But again, we're talking about a dynamic level of support and resistance, right? So based on the higher time frames, I'm still extremely bearish and looking for price to descend into the 8,000, potentially even 7,000 or lower levels. I think that is coming. I think that is the next dominant trend. I think this overall consolidation of Bitcoin does break to the downside. I have not changed my opinion on that in quite a while, and I'm gearing up for that. That's where my positions are. But I'm not also going to get trapped in a short squeeze. Now, this last short squeeze did negatively affect me, right? You guys know my stop loss is not based on this kind of price action. My stop loss is based off the daily. based off of ATR. So I was far away from the stop loss. This stop run did not affect me whatsoever. Still in my position. In fact, added to my short position on this upswing. But should we break back above this order block right here in between 10,389 and 10,462 on the ByBit chart, if we cross and close above that level on the 2-hour time frame, I'm going to get out of my short position. Because what that means, what that most likely means, is that we're going to have another stop run, right? And potentially a more violent one. And there's no reason for me to be caught up in that one, because that one will potentially trigger my stop loss, right? So where do I see that stop run going? Well, where's the next area to grab for liquidity? Next area to grab for liquidity is obviously going to be sitting right above the bearish order block, right? The bearish order block that we just got done talking about. We traced it all the way back to its genesis point back in the 22nd of June, 2019, foul year of our Lord. And that is the current area. All right. So anybody that added to their short or got into a short on this candle, and we're talking about savvy traders. We're not talking about institutional order flow. Where are their stop losses going to be placed? Where is the next stop loss level that hasn't been triggered yet? It's going to be sitting right above or in that bearish order block, sitting between 10,882 and 10,968. That is the next level. So we're talking about pretty much the $11,000 area, $11,000 psychological level, static number right there. That's really what I've got my eye on. So if we end up crossing and closing above 10,462, crossing and closing above that level, then that, to me, indicates that we're going to continue bullish expansion in the short term to trigger more liquidity before we move to the downside. And I will sidestep my short position in the interim and take advantage of that long swing, because if we have another stop run, most likely that stop run will be more violent, will be more virulent, will come with more price action. And there's no reason for me to be on the wrong side of that trade. And I can look at these higher price levels to re-add. But at that point in time, I'll be in the long swing for that point in time. Not really a long swing. That'll still be more of an intraday trade. But as high as price wants to go, I'll be willing to take it up to the upside. As high as price wants to go, if we do cross and close above 10,462. And really not be looking to add to my short up there. I'll wait for a proper PTP short signal from that point in time. Because again, I don't think that this level of support that we've put in, in the low 9,000s, in the high mid to low 9,000s, I don't think it's going to hold up on another retest, right? We can see the weakness of this level. I think this level is extremely weak, and that's really the level that needs to get cracked. And we have confirmation of that again if we go to the weekly. If we go to the weekly and bring up the baseline and look for what is our level of dynamic support right now on the weekly, it's 9,864. Just waiting for that level to get cracked. If that level gets cracked, it's all she wrote, man. All she wrote. And you guys can see my setup right here. All my take profits are actually predicated on that concept of us breaking that level of support and taking price all the way down to the low 8,000s. Okay. So I want to thank Professor Sean, Invisible Friend, Regina Scott, DJ Tom Official, Pascal, and Ronnie. Thanks, guys, so much for joining the community over there on YouTube. You guys are absolutely fantastic. Happy to have you guys on board. Okay, so that's all I got for Bitcoin analysis. Let's take a quick break and go through the live chat. Excuse me. You are welcome, Adri. Wendy, I think that is kind of that is the, I don't know if there's going to be a monster liquidity grab. I would not put one out of my mind, just as I posted in the market analysis channel this morning in the premium Discord. I would not put that idea out of my mind, and that's why I'm looking to be prepared if that does happen. And that's why I'm watching that order block level closely, which is not something I'm going to normally do, but it is something that I'm going to be watching right now. We can see that level is acting as significant resistance right now. Again, very interesting to me is that exactly where that pump candle ended up closing, it was unable to sustain itself above the order block, letting me know the monster sell orders that are resting in that area. So I don't know if they suspended their limit orders, if prices moved up with so much liquidity, if these orders are coming in automatically, because I know that for a lot of institutional order flow, they don't just slam their whole order on there. They have, so say somebody's trying to unload 80,000 Bitcoin, they'll have a script that automatically replenishes 100 Bitcoin sell order over and over and over and over and over again. And the reason why is because they don't want a massive sell wall, right? They don't want a massive sell wall, and they want to be able to scale their limit bids up should price break to the upside, right? So a lot of these sell protocols, a lot of these selling bots that traders will use, well, and I don't even want to call them traders, they're really whales, but some of them are traders. When they're looking to sell their Bitcoin at certain levels, they have programs, they have bots, and what that bot will do is not attempt to create a massive sell wall, because sell walls are visible, and individuals will trade, will counter trade them, will counter trade these sell walls and take price the other direction. So, it's not like some massive Illuminati conspiracy of all the whales wanting the exact same thing. I think a lot of investors right now, I think a lot of large holders of Bitcoin see the same tidings that I do and are looking to unload their price as high as humanly possible. But we can see, again, just this wall set up at 10,446. If that wall should break, I think most likely we'll grab and test the wall around the $11,000 area. And there's no reason that I want to be in a short trade from 10,400 to 11,000. That doesn't make any sense. So I'll take the long swing up to 11,000, and then we'll kind of reevaluate at that point in time. We'll reevaluate at that point in time. Math Tutor asks, is there a utility in comparing open interest with volume? Open interest is something that I have looked at and tried to derive some good results from. The only problem with open interest, let me think about this answer for a little bit. So when we see rising open interest, what does that mean? It means that there's more positions being put on, and winning positions, right? So when open interest is rising, it means that more traders are winning. And well, of course, it's a zero-sum game. So without traders who are losing, traders aren't winning money. So open interest means that not only are traders winning more, it means that the traders who are losing are okay with that, and they're re-adding, like they're continuing to open up positions, right? That's why you often see open interest rise. It's not just buyers. Let's say price is moving up. It's not just buyers being more aggressive with their buying. It's also sellers being more aggressive with their shorting, right? So you're going to have people on both sides of the market trying to play it both ways. So when price is moving up and open interest is rising, it means you have more winning traders coming into the market, and you also have losing traders who are continuing to push their liquidity back into the market because they're okay with losing. When you have open interest falling, it means that those who are losing are unwilling to continue to play the game, right? They are unwilling to continue to open up losing positions, because that's really what it means, right? It also that's how I interpret it. It can also mean that traders, buyers or traders who are winning, are being a little bit more passive with they're being less aggressive, right? They're like, oh, I'm winning, I'm taking profit, but I'm not establishing new positions. I'm just trying to get out of the market, pull my money out of the market, right? So obviously, like Bennett has done a good job at analyzing open interest and developing some trading strategies for that. And I think he does good work. I just don't see how I haven't been able to fit. I just see so much sporadic activity and open interest, and it comes down to, well, you got to find the right time zone, and we got to look at this. Now, I think that an open interest indicator is a great idea. I think that you can use it as a momentum indicator, as a volume indicator, as a volatility indicator, and I think that absolutely there could be some decent correlation to be transcribed from comparing it not only with price action but also with volume, because I think that volume can often be more important than price action. But or at least you need volume to qualify certain price action. Because again, if there's momentum, which is price action, if there's momentum without volume, it's not a trend. If there is momentum with volume, that is a trend, or a trend reversal, right? Price action without volume is largely meaningless and ranging. So it's not really something that's made it into my algorithm. It's not really something that's made it into my system. But I definitely think that the option is out there. It's just something that needs to be ground on. Now, that's not something that I've ground out away a lot, but I definitely think that that's an interesting opportunity, especially, I don't, obviously you can't make a trading view indicator out of it because it's not a Wanda data, but you, I mean, obviously you could do something in Python or you could do something of your own, and there's nothing wrong. Like, obviously I've talked about using MetaTrader for some indicators that aren't available on TradingView. So good question, man. Good question. Satoshi Nakafomo, what's going on, my man? Bob the Builder, good to see you, my brother. What's up, Professor from another confessor? Kyle, you got your winnings, man. Congratulations to Mr. Kyle Mitchell, the one, the man, the only. Big winner in the ByBit trading competition, pulling in that $1,000 in EOS prize money. Thank you guys so much to everybody that participated in the trading competition who traded EOS with us. It was valiant, man. So I'm glad you got that $1,000 ruse, my brother. Oh, received in Bitcoin. Nice, man. Nice. Dan says, Justin, I try to follow strategy as best as possible when all signals line up. Do you just take the price at market and go as soon as your system candle closes? Typically, yes. 9 out of 10 times, yes. I'm just going to market enter. I'm going to set my stop loss and my take profits, and I'm going to walk away. Now, there is a little bit of, just for me, this is my own personal thing. I've learned to let my system run. And for the most part, I just don't mess with it, right? I just get out of its way. But there are times when I will look, as I just pointed out today, when I'll look at discretionary factors that I think are unique to the cryptocurrency market that I don't think apply to other markets like Forex, where you largely just want to get out of the way of your system. But there are some nuances to cryptocurrency, which I think only somebody who's been in here and traded this for several years can really look at and understand. Because cryptocurrency, again, unlike, I mean, Forex can still move extremely volatilely, especially like today. The Forex markets are fucking nuts today. But today, or excuse me, cryptocurrency just on average is far more volatile than Forex. So that definitely needs to be taken into account. And when you're dealing with that, you're working with fire. So there's nothing wrong with trading Bitcoin. There's absolutely great ways to do it profitably. It's the only space, I think, unlike Forex, where you can realistically come in with a smaller amount of capital and not have to take money from a prop firm, not have to take money from somebody else, and become a profitably consistent trader on your own with your own investment, which is, in my opinion, far more empowering than working for a prop shop. But again, that option is absolutely out there for some people, and a noble goal. Again, it's I've been there. All right, so okay, let's cover the questions that I got because I think this is important. All right, so we're here. Let's flip over to, do we want to do? Staying disciplined is difficult, man, but it is the root to all success, my friend. Just keep plugging away at it, man, and stay sticking around. We're here to help you, man. Make sure to hop in the Discord. We got lots of ideas, man, lots of stuff we try to do to help everybody out. All right, so I want to talk a little bit, and we're just going to go a little bit more personally here. I want to talk about the importance of moving your stop loss and preserving capital, right? So as you guys know, I trade Forex. And doing quite well with Forex. I'm up about 8% this month, again, after pulling in about 11% last month. So very happy with my results. And again, just as I've told people, trading PTP, just a daily system on the Forex charts, trading the major pairs. So, you know, things have been going very, very well. But yesterday, I made a Well, I guess it's not really a big mistake, but I did make a mistake. And so it even happens to me. So I just want to share this personal experience with you guys. So I put on a Forex trade, and I looked at I was driving yesterday, and I was parked, and I heard my phone ding, right? And I looked at my phone, and it was FX trade, because I trade on a Wanda. And it said standard limit order triggered, right? Which is a joyous occasion, because that means take profit one got hit, and it's time for me to move my stop loss to break even. Now, I was on my phone, and I made a mental note. I was actually going to go move the stop loss to break even, and I was up about $300, right? So that trade, I was up about $300 on that trade. And I was like, all right, great. And didn't move my stop loss up to break even, because it was at that point that traffic cleared up and it was time to drive, and I'm not going to be sitting there on the phone trying to diddle around. People behind me are trying to honk the horn. It's like, I'm not trying to be that guy. And so I put my phone down, and I continued driving. I had my kids with me, so we went to where we wanted to go, and we finished our activities. And for whatever reason, it slipped my mind, right? Yesterday was a busy day. I came home right after that, and I talked about obviously I was doing a lot with my family yesterday. I came home last night. Margaret started looking really crazy. I had to do analysis. Give my analysis to the members, manage my trades last night, do my daily scan and my daily trading, which I didn't really do a whole lot of trading last night because there wasn't really anything to do except for reduce risk. And then had about 3 or 4 hours of meetings with my team, getting ready for the week, as we do. And for whatever reason, it just didn't cross my mind to do it again. It just didn't pop up. Why? Because my system is always, I get the notification on my phone and I immediately do it, right? And so just being pushed out of my strut, out of my typical routine, messed that up. And guess what I got this morning? I woke up this morning and I got another ping on my phone, and it was stop loss being triggered, right? So the stop loss being triggered cost me $450. So I ended up losing $150 on that trade, all because I made a mistake. I was in a trade. I made money on the trade. It was in a situation where the trade should not have been a loss. But because I was not operating inside of my regular structure, which is so critical to me, I ended up losing money on the trade. Now, is it breaking the bank? Did that bankrupt me? No. The majority of my other Forex trades are profitable. I have 2 open positions right now in Forex that are in drawdown, but that's okay. I'm still up. Those don't really affect anything. It just depends on where they go, and that's how trading goes. Now, I just want to point that lesson out just to let you guys know I've been doing this for a very long, long time, and that almost never happens to me. User errors almost never happen to me. I'm just too efficient at this point in time in my trading career. But as somebody who harps on discipline, you can see that when I step out of my system for something as simple as I did not have enough time at a stoplight to move my stop loss order up, and therefore, and then just for whatever reason, my kids are watching TV in the car, and it's just, whatever, man. It's being a parent is real life. Didn't set a notification or a reminder, because normally I would. When I'm at home, I've got my digital assistant, so I can just say, hey, G, set a reminder for 10 minutes to do something if I'm baking a cake or cooking or whatever, if I'm, outside or doing something, working out. But I didn't have that available to me at that point in time. So if somebody who's been a professional trader for such a long time as myself can make a mistake that ends up in financial loss on a trade just by being outside of their regular environment, the same concept goes for you guys watching if you think that you're just going to be flip-flopping the way that you look at the charts every other day, right? If you are looking for confirmation bias, then you're not going to have a lot of profitable trades. If you are approaching the market looking for indicators or switching your settings on indicators from day to day because you're looking for something to confirm your bias, or you're looking for justification to take a trade, and the settings that you've tested to give you good signals tell you to do nothing, but you see everybody getting excited and you see the market doing some big things, you're not going to have a lot of success. You need to build that discipline. You need to build that structure. And the only way to get there is to do the same thing every single day like a robot. Develop that structure, develop that system, find out what works for you within that structure, have consistent data that you can test, and so you can make any changes because you've been doing the same thing, so that data actually means something. And then just get out of your system's way. Just trade that way. just trade that way. It is all the subjectivity. It is all the subjective ideas. It is all the subjective notions. It is all the attempting to justify a trade that most likely is not there, where all the biggest losses are going to come from, where all the biggest mistakes are going to come from, and where you open yourself up to making a myriad of mistakes that can cost you money. Because when you have live money on the table and you're trading for real, your decisions, your choices can cost you money. And you have to be executing efficiently, and you cannot make mistakes or you lose money. All right, let's hop back over to the market. Close, but no cigar. Oh, wrong button. There we go. Here we are. Sorry. All right. I want to talk about... Okay. So, I want to talk about if you got a signal. Let's go back to the... Here we go. This is a good one. Okay, so let's talk about the next question that I got as far as trading goes. So if you got a signal yesterday and then today you get another signal, would you increase your exposure to the market, right? And so my answer on this is going to be twofold. So answer number one, short answer is no. I would not increase or recommend individuals increasing their exposure to the market. You know, the other question is, if you are trading a daily time frame or a higher time frame like the 8-hour, and you got a long signal yesterday and you're getting another long signal today, I would really focus on the sensitivity of your system, because that seems far too sensitive. You want a trading strategy that generates good signals, and so therefore it needs to be sensitive enough to respond to the volatility of the cryptocurrency markets, but it can't be so sensitive that you're getting signals every day in the same direction, because that means that for you to get a long signal yesterday and today, that means that in between yesterday and today, so it can't be a daily signal, but yet in between yesterday and today, your system gave you a long signal, went up, invalidated it, and then gave you another long signal. So it faked you out and then gave you another long signal. And I think that that's too sensitive of a system. Now, it might be okay. You're the one that's going to be back testing the system, but that already kind of throws up a little bit of a red flag for me. Because I would think that that is too sensitive. But again, it all depends on your filters. You know, I find that it's often good. To have a sensitive initiation indicator, and that there's nothing wrong with having a sensitive initiation indicator, because you want it sensitive enough to get you into the market. It's really, the magic comes with the filters, right? Is looking at the comprehensive picture of what the chart is saying. And so that can often end up getting you into the good trades and keeping you out of the bad ones most often. So, but let's just take that part of the conversation out, and let's just talk about the risk management and position sizing, right? Let's just talk about the money management. So, would I increase my exposure to a long trade? So let's talk about why you would want to do that. So why would you want to do that? Well, if you think that you got such a good trade because, man, I got two signals on it back to back, so this is a powerful signal, then in your mind, that would strengthen the signal for you. And therefore, if you just put more money into the trade, you're going to make more profit. Seems pretty simple, right? Now, the problem with that is that is absolutely the wrong thing for you to do. Again, most people who approach trading as high risk discretionary gambling, and it's not. You know, I have a contact who is a professional gambler. I have several friends who are professional card players, and they all approach the markets, or they all approach their occupations the same way I approach my job, which is a numbers game. It is a game of statistical edge, right? There are often times in a trade where I know my trade is going to be a loss. And do you know what I do? I let it loose. I let it hit the stop loss because it was meant to. I've tested my system. I've tested it thoroughly all the way back and forward with live money. I know it works. I don't question it. I let the trade work out the way the trade was supposed to work out. And if there is an issue with my system, then I wait and collect that data, and then I look at changes I can make. But that means I need to pull that system from live trading if there's an error or an issue. I don't let 1 month of erratic data skew my results, or 1 day of erratic data skew my trading psychology. I know my system works. I've traded it for a long time. I just get out of its way for the most part. And when it comes down to money management, putting more risk onto one trade opens you up, just as we just talked about, with being in the sway, with being in the strut, with being in the system, with being in your routine, gets you out of your disciplined day-to-day money management system. And you do not want that, because that is counter results, because then that will open you up to other mistakes, other discretion that you do not want to be making, especially as a new trader, i.e. taking more risk when you're underwater, moving your stop loss, not position sizing appropriately, looking at other elements of your system that you should not be looking at. Once you start faltering on the discipline and strategy of one component of your system, it just makes you weaker over here. A good analogy is if you have dedicated yourself to waking up early every morning and doing some push-ups, and you find that that makes you eat healthier throughout the day, so now you have this rolling snowball effect of getting healthier in your life. If you notice that when you wake up and you choose not to do push-ups, that those are the days that you decide to get the donut with your coffee at Starbucks, a loss of discipline in one area of your life radiates out into every other aspect of your life. Discipline equals freedom, guys. Discipline equals freedom, because discipline allows you to choose your actions in life. It gives you control over what you want to do. When you don't, when you give in to your body, when you give in to your fear, when you give in to your mind, you are giving somebody else that is not you. That voice in your head is not you. That's not you. That is your fear. That is your weakness. That is whatever you want to call it, right? There's lots of different religions and philosophies and ways of life that anthropomorphize that internal voice, but that is not you. You are the person who at night sits here and says, man, okay, I need to get up at 6 o'clock in the morning, and I need to do some push-ups, and then I need to eat a healthy breakfast. I need to call my mother tomorrow, and I need to be nice to my kids. That is you. That is freedom. That is the person, the logical, rational part of you that has the ability to structure your life out to make you better, to make your life more successful, to make your life more rewarding. That voice in your head that says, I don't want to get out of bed this early. I don't want to drag myself out to do some push-ups. I don't want to drag myself out to do some squats this morning. You know, maybe I'll just shave my head tomorrow. You know, it's okay. I'll just throw some extra deodorant on. It's cool. That is not you. That is the weak part of you that wants you to fail. And you have to overcome that voice through discipline. And the easiest way to do that is by writing down what you're going to do, writing down tomorrow, tonight, and then following through on it. And every day you do that, you gain momentum, you gain traction until it's just second nature, and you are living not only, there's no words for it, you're free. You're free. You do what you want. Not everything in your life you're going to have control over, but you're going to have control over yourself. And the only way to have control over yourself is discipline. So, Scott, I definitely want to touch on that. So Scott says, talking about the trade, I think talking more specifically about just letting the trade hit the stop loss, because doing anything different is then micromanaging the trade and changing the initial plan of entering the trade. Correct. Now, it's fine if you have an exit system. Well, of course, you need to have an exit system in place. So and remember, our exit system is designed to get us out of the trade before the stop loss even gets hit. That's the whole point. So, you've constructed your exit system to work well. So once you've done that work of making the system, you just listen to the trade, man. You just listen to the trade. I don't think the problem is with the donut. I think the root of it lies with Starbucks in the first place. Nah, never, man. Capitalism to the hilt. I love Starbucks coffee, man. You guys are good people. Okay. Next question. If we're short and price hits our stop loss. Okay, so this is a good one, right? So this is a good one. We'll probably focus on a trading crypto 101 with this. So question is, if we're short and price hits our stop loss, how do we protect ourselves from being flipped long and then price retracing? I.e., once we're short, price moves up, hits our stop loss. We're now in a long position because we're not short anymore. And if you're not short, you're long. Price moves down, we've now lost dollars, right? So the ye old classic, hey man, I set my stop loss too tight. Price moved up and hit my stop loss, so I was long. And then price ended up going short and I lost a lot of money. So how can we protect against this? All right, so it's a couple different ways. The first way is going to require a little bit more management, and I don't actually recommend it, but I think it's important to have on top of what you're going to be doing in the background, right? So there's a way to set this up all in advance when you set your short trade to protect your capital, and we're going to discuss that. That's the best way to do it, but we'll talk about this first, and this is going to be more active. So the first thing you need to do is set alerts on TradingView or set alerts on your phone or whatever charting software application that you're using, right? There's so many ways out there you guys can get price alerts. Just set a price alert for what your stop loss level is. That way you're aware that your stop's been hit. And if you need to do anything, if you made a mistake with the next step that we're going to get to, you can log in and change those pretty quickly, okay? So in this example, you don't do anything except just set your stop loss for your trade. And if you know you're going to be around when your stop loss gets hit, then you go in and you put on your hedge, right? Unless you have a specific reason to be flipped long, which I almost never flip direction on a trade if my stop loss gets hit, because generally you're going to be entering at the worst possible price. So like last night, for example, when a lot of stop losses got triggered, I know a lot of people probably went long. Worst possible mistake they couldn't have made. Liquidated on the way up, liquidated on the way down. I mean, it just never ends, man. But so that's option one. So I definitely think you should be setting those alerts no matter what, but I don't think that this should be the way that you actively manage it. So option two is, and we'll go over to the charts for this. Option two, and this is the better option, and we're actually going to do some live examples here on stream just so you guys can see a little bit more clearly. Not really live examples in the thing, but we're going to pull open. Going to show you guys a couple things. So first off, let's say we're going to set a short trade right now. All right. So on the 2-hour time frame, and for whatever reason, and we're going to use Quadriga ATR to set our stop loss. Okay. So we're going to go short. So our stop loss is going to be at 10,550. Right. So let's just go ahead and drag our previous stop loss down to our new stop loss. Right. So here's our stop loss right here, 10,550. And our take profit is going to be, just use take profit 3, right? Okay. All right. So here's our setup. So we're going to be going short from here. And we're going to set our stop loss right here. And we're going to be targeting pretty much the range low. So this is a 2-to-1 risk to reward ratio. Excuse me. On the 2-hour time frame in this example, in this setup, right? Now, how are we going to position size? We need to know a few things. So obviously, if you guys are in the group, you can just use the position size calculator. But we need to know a few things. We need to know how much equity we have. All right. So this is going to be how much money we have. So let's assume that we have $5,000, right? Okay. We have $5,000 in equity. That's how much money we have in trading capital. Now we need to know our risk percentage, right? This number is what percent of our account are we willing to lose per trade. That's all this number means. So generally, remember guys, I think the maximum you guys should be going is 3%. And that is the maximum. Okay, that's the maximum. Generally, I'm going to recommend that newer traders start off with less than 1. You guys should be using 0.5% or 1%. And then as you get confident, you can start boosting that up to 1.5 to 2.5, 3, right? It should be a natural progression of pushing your risk up. So let's just assume that we're using 2% risk, right? So what is 2% of 5,000? That's $100. Guys, first off, if math like this, if you didn't have that answer immediately in your head, what is 2% of 5,000? And I don't mean this in any kind of cruel way, but you're going to have to get a little bit better at math if you want to be a trader, right? Like things like calculating percentages or doing quick, you don't need to know algorithms or complicated formulas. You don't need to know any of that, but you need to be good at mental math, right? You need to be good at basic addition, subtraction, multiplication, and division. You need to understand ratios, percentages, and fractions. You need that stuff needs to come naturally. And again, I don't naturally come good with math, so I had to do like refresher courses online, right? And I continue to take them so that I can improve my mental math skills. And it just comes with time. It doesn't mean you can't be a trader if you're not good at math, but it just means that you will do a lot better if, in addition, you spend a couple hours a week or a couple hours a month at least doing like math refresher courses, right? Or just doing puzzles or flashcards or whatever it is. I know it sounds silly, but it really, really will help you out, right? You want to be able to quickly calculate position sizes, quickly understand risk ratios, quickly understand percentages, and that's going to help you just really, really in a flash. But again, another nice thing is that we provide the tools to you in Kraken Crypto to really help supplement you as you walk through this. So anyways, so this means that our acceptable loss is going to be $100, right? 2% of 5,000. Acceptable loss is $100. Okay, so now we need to know the distance to our stop loss, right? The distance to our stop loss is 2.26%, right? Now, what is that in decimals, right? So distance to stop loss is 2.26%, and in decimals, that would be 0.0226. Okay, so that's the distance. Okay. Now, we take our acceptable loss divided by the distance to stop in decimals, and that is going to equal our position size. And what kind of position size? A position size where if your stop loss gets hit, you are losing this much money. We are losing $100. That's how we position size. So in this example, what we would take here is we would take 100 divided by 0.0226, right? And that's going to equal 4,400. Let's do it on the calculator. 100 divided by 0.0226, 4,424. That's your position size, right? $4,424. Now, in this scenario, in this position sizing example, you're often going to need to have access to leverage because sometimes if you're, those who understand the math here, the closer your stop loss is, the more risk you can take on. And by more risk, I mean bigger position size, right? So the tighter your stop is, the larger the position size you could take because price needs to move less of a distance to hit your stop loss, meaning you can have a larger position size, right? The farther your stop loss is, the smaller your position size needs to be because you're going to lose a greater percentage on that amount of money. So this is how to position size appropriately. Burn this formula into your brain and start off every single trade by doing this calculation. And this is going to save you so much money in the long run. This is the most important thing about trading. Entry, exit, all of that's important. If you're not position sizing appropriately, it really doesn't matter because this is how you end up playing the long game. This is how you stay a trader for the long haul. So if you guys want to double test that math, what is 2% of 4,424? So the way to do that, if you want to back test this math, is take that 4,424 test, take 442, take your position size, and multiply it by 2%. Okay, it's going to give you $100, right? Or excuse me, multiply that by the stop loss, 0.026. 99.98. should equal acceptable loss. Okay. So there you go. That's how to do it. So now let's talk about how this applies to our shorting, right? So we know, so we want to hedge our entire capital, right? So we want to hedge our entire capital. So let's use this example. So we want to say, okay, we want to be short right here. And if price hits our stop loss, we don't want to be long, but we want to be hedged, right? So we still want our capital in a short position, because if our stop loss gets hit, unfortunately, that sucks for our short position, but we don't think the price is going to go up. We want price to go down. And if your stop loss gets hit, you should be hedged, because if your stop loss gets hit, that means there's a lot of volatility going on right now and you don't know which way the market's going to move. You didn't get in at a good price and you shouldn't be trying to chase price the wrong way. So the safest thing for you to be is hedged, right? i.e. in cash, i.e. short. So, because remember, and if you guys don't understand this concept, please go watch my margin trading explained by a professional trader video in the Trading Crypto 101, where I break down where if you are short, you don't lose dollars, even if price pumps 30%. Just doesn't happen, right? You lose Bitcoin, but you don't lose dollar value, right? If that concept, if you think I'm crazy, if you think that sounds ridiculous, go watch the video. You don't. So in this example, we have a $4,424 position size. If price hits our stop loss, we're going to lose $100, right? Which means we have $5,000 total. So we're going to lose $100 off that $5,000. So if this trade hits our stop loss, we're going to be left with $4,900 in capital, right? And to be honest, in this example, there is an externality because there is going to be $560 some that we're not taking long, right? As you can see, we have a capital balance of $5,000. And we're only taking a $4,424 position size, meaning there's going to be about $500, $560 not in play, not in our position. And if price goes up to hit our stop loss, we will have more dollars. So that, for the purposes of this example, that's an externality we're not going to include. You guys should be able to do the math. And again, the nice thing about this, you go over to your assets tab, right? But again, you can figure that out as well. Exactly how much, is that? Sorry, let me just think about how to plot this out. So, exactly how much is that you're not taking long, and multiply that number by the distance from price to the stop loss, right? So that's how much it's going to appreciate, right? So it's $576 and price is going to have to move 2.26%. So 576 times 0.0226 equals $13.01. So add that back on the 576, the 589. So if we wanted to be 100% perfect here, we would be adding $13 to whatever position size we're going to get here in just a second, right? So just keep that in mind, right? But again, that's an externality, and we're going to exclude that from the purposes of this demonstration, right? And hopefully I didn't lose you guys in the weeds with that. But anyways, so we know if we have $5,000 and we're putting on a $4,424 position size, and price hits our stop loss. With this position size, we've lost $100. So we now have not $5,000. We've just lost $100. We now have $4,900 in our trading capital balance, right? In our capital balance, in our equity balance. So now if we want to hedge that, we need to have a $4,900 short position open, right? And by the way, something that I did not point out is, in reality, you would not be taking a $4,424 position size to the downside. You would have to be taking a $9,924 position size to the downside. That's how many contracts you would sell. Because whenever you are short selling Bitcoin and you want to make dollars, you need to go short your position, your capital first, and then add your position size to it. Otherwise, you're just making Bitcoin on the way down because you're not hedging your capital balance, right? You need to hedge the Bitcoin that you have long and then short the Bitcoin that you want to take on top of that, right? You have to be starting from a cash basis. Otherwise, you're not going to be making the same profit on the way down. You're actually going to be losing money. Because again, let's use this example. We talked about that $13 externality, right? Because there was $500 we weren't taking short. That's $500 that you have long, right? And if price goes down almost 5% in this example, you just lost 5% on that $500. And that is cutting out of your profit that you're making on the short trade, right? So if you want to make the full extent US dollar profit off of your short trade, you have to hedge first and then add your short position on top of that. So in this example, if you want to go short, you would actually be going short 9,924 contracts. So you would take the 5,000 capital balance that you have and add the $4,424 capital balance. All right. So hopefully I didn't lose you guys with that either, but that's where we're at. So that means we need to be setting our stop. This all comes down to, if we want to make sure that we're hedged when the stop loss gets hit, we have to talk about what number are we going to set our stop loss for, right? What number are we going to set our stop loss for? So we have a $9,000, $924 position size, right? $9,000, $924 position size. And we want to make sure sorry, I've been saying 9,924. I misspoke. I apologize. 9,424. So I apologize for that. Hopefully you guys figured out that $500 error and realized the math is 9,424. So anyways, in this example, we would want to set our stop loss for less contracts than we have short. So we want to hold some of our short position open to hedge our account. And we know that when the stop loss gets hit, we're going to lose $100. So we're going to want to maintain a $4,000 900 position size after the trade is concluded, right? So if we have that $9,424 position size, we just subtract 4,900 and we get 4,524. That is going to be the stop loss that we're setting. So we set that stop loss for that. So we're going to sell 4,524 contracts at the stop loss. So we would do a market sell right here. If we were going to go short right now, we would market sell 9,424 contracts. We would set a stop loss for 4,524 contracts, which is position size plus loss. And that's it. And if your stop loss gets hit, you want to cancel your take profits the way down and wait to reestablish your position to the downside. Okay. So hopefully that's helpful to you guys. If you guys have any questions about that, I'd be happy to answer that. I know that might seem complicated, but once you start understanding the position sizing, it's very simple math, and then realizing just how to set those limit orders, you'll be way ahead of the game. All right, Ken D says, paying $8 for a cup of coffee and being expected to tip someone for doing their job in the first place. Nah, if I were a Java junkie, I'd make my own. So I definitely do make my own coffee. I pay anywhere from like 10 to 15 cents for a cup of coffee that I make at my house. I make iced coffee. I make regular coffee. I do it all, man. And I absolutely agree with you. I like to live the frugal lifestyle. I like to save money, but sometimes I'm out with friends and I do enjoy going to Starbucks, and I have no problem with tipping the waitress a few dollars. Their coffee tastes really good, and people like that. I think that the problem is not with Starbucks. I think that the problem all comes back to how we raise children, to understand budgeting and to understand discipline, right? Of learning that saving money is more important, and that it actually gives you better results in life if you don't go out all the time. So there is something wrong with going to Starbucks every single day. There's nothing wrong with going there once a week or once a month and having a good time out. Crypto Jack says, I got the Breville espresso machine a few years ago. Only do coffee at home now, paid for itself, and it's the primo stuff. I gotta say, man, you know, I had an espresso machine for the longest time, and I don't have it anymore because it broke, and then I just didn't buy another one. I had it for a long time. I think it might be time to spoil myself with an espresso machine. But I got the nice Keurig out there, I won't lie. But I do a lot of I do the French press. I use my French press quite a lot. So I do cold brew French press. So I just, you know, put quite a bit of coffee in the French press, fill it up with my reverse osmosis water, put it in the fridge for about 12 hours. Good to go, man. Cogito Ergo Zoom says Khan Academy is great for bolstering long forgotten math skills. That's a good one. Yes, I have heard that recommended. Hody Yo says, hey, Justin, what programming language is worth putting time in? Python or C#? I heard Python is simplistic compared to C#. Platforms such as MetaTrader 4 and 5 and NinjaTrader support C# over Python. It just all depends on what you want to do, man. I mean, obviously, if you want, you know, kind of I'm not a programmer by nature, man. You know, I'm really good with Pine, and I work with some great developers. And I, you know, again, one of the developers I works with is really good with Node.js, is really good with C, is really good with C#, and is not very good with Python. And most of the other developers that I work with are really, really good with Python. So it's just one of those things, man. It's just one of those things. I think that, you know, learning both is good. I think if you want to do a lot of trading related stuff, Python's not going to suit you wrong. From what I understand, it's a little bit easier. There are some, I don't know. I'm going to rile up a whole lot of developers if I start going into the nuances of one programming language against another. I'm really not the authority on this. If I had a bias, I would rather learn C#, honestly. I think Python can do a whole lot though. But I think that if you're going to be doing a little bit more institutional grade platform trading, I think C# is probably maybe the direction you want to go. But again, that's definitely do your own research, man. Chowdery says, at which levels should we add more margin to our existing orders in a margin trade? I think that really depends on the way that your trade is set up. I don't think that you should be going over your risk level. I think that you should be using the formula that I just showed you here on screen to calculate what is the best position size. And I think you should just, if you want to scale into that position size, that's fine. But I don't have specific level, or, you know, again, that's all. I don't know exactly how you're going to trade. So I already added to my trade at 10,600, and now I'm going to be exiting my trade if we cross back above 10,462, because then I think we're probably going to upswing to 11,000. But as it sits right now, I definitely think the trade is to the downside. Jax likes to grind beans fresh and have the steamer, but yeah, cold brew is super hot right now, man. Hey, you're welcome, man. Thank you so much for the support, my good friend. All right, guys, I think it's time for us to take a quick break. When we come back, let's break down the Forex markets a little bit. And also, I want to talk about the news because we've got so much to talk about today. We're going to talk about America being dethroned as the world reserve currency and what impact I think this has for my portfolio and how I'm taking this, how I'm responding to this. We're also going to talk about Binance's new lending platform. We're also going to talk about some changes to MyEtherWallet, and we're going to talk about the massive short liquidation wick on BitMEX in a little bit more detail, guys. Before we go to break, as a trader, selecting our exchange is one of the most important decisions that we're ever going to make. I am often asked as a professional, what are the most important metrics when making the decision about which exchange that we should trade on? And my answer is always the same. There are three major boxes that any exchange that I am considering must check. And those boxes are security, ease of use, and customer service. And the exchange that checks all those boxes for me that I use to trade Bitcoin futures is ByBit. I think their platform is intuitive and simple to use, yet it also has advanced order features for seasoned traders. Their customer service is right in the corner. Their live chat is always available, and on-demand support is one click away. I've absolutely loved using their platform, and I very much preferred over alternatives in the space like Deribit and BitMEX and the associated issues that are on those platforms. If you guys would like to check out ByBit, you can visit bybit.krakencryptocurrency.com. There is a link down in the description below, and receive up to $60 in your margin account to test out the platform. You can't withdraw the $60, but you can use it to trade ByBit. If you actually deposit funds and end up losing money, they take that $60 first, and any profits that you make off the $60, you actually can withdraw. So it's a pretty low stress, low risk way to test out their platform and see if you like it and see if it is the exchange for you. Again, it's bybit.krakencryptocurrency.com. Link is the second in the description down below. We'll be right back, guys. While we are gone for break, make sure to get your user submitted chart requests ready if there's anything you guys would like me to look at. And if you guys have any questions about what we've covered so far, don't go anywhere. We'll be right back. And we're back in the live scene, guys. Thank you so much for joining me. If you are just joining us for the second hour, make sure to go back and rewatch the first hour. There will be timestamps after the video is published. Obviously, make sure to leave your comment below if you guys want to be entered in a chance to win 85x42. And we talked extensively about position sizing, trade psychology, proper setups, when to trade, and where Bitcoin's price is going. Whoa. Hey. We also talk, germanely enough, about coffee. Got the cold brew coming in right now. All right, guys. So let's... Oh, you know, something that we didn't talk enough about, and I really wanted to touch on this. So let's start off with talking about Bitcoin volume. And I think this is absolutely essential. So, where did I put this? Okay, here we go. Bitcoin trading volume. So I want to go over here to data.bitcoinity.org, and I want to look at trading volume. And this is going to be combining trading volume across all the major exchanges. And this is something that I do keep an eye on, that I do watch. Because, and I think that this will be most germane, I think if we go over to the Bitstamp chart is where I believe I had laid this out. Let's go to the Bitstamp chart. No. Put on XBT USD. Yeah, here we go. XBT USD. Okay, here we go. Here's where I laid this out. Let's delete some of these circles. I was talking about this morning and posted this also in the members lounge to the guys in the premium Discord. Come on now. Delete. Okay, so this chart's going to matter in just a little bit. So let's go back over to Bitcoin trading volume. And what you'll notice is yesterday we had a massive spike of combined trading volume. All right. The highest that we've seen in the last 30 days. So hopefully you guys can see that very clearly on the chart. You can see this huge number, this huge spike right here is the combined trading volume across the BitX, the Bitfinex, Bitstamp, Sex.io, Coinbase, Exmo, Gemini, Itbit, Kraken, and others. Now, we know that that some of these exchanges are going to be the wash trading exchanges, right? So even if we adjust for that, and we just take Bitstamp, let's get rid of Sex.io, Exmo, let's get rid of Itbit, and others. Even if we take those out and adjust for exchanges on the Bitwise Real 10 volume exchanges, we can still see the outlier that yesterday's trading volume was. And so what I want to point out is all these other big spikes that occurred on the 28th of July, that occurred on the 6th of August, that occurred on the 10th of August, that occurred on the 14th of August, and that occurred yesterday on the 25th of August, right? So the 28th of July, go back over to the chart, and that's going to be this day right here, the 28th of July. The next date is going to be the 6th of August. That's this date right here. The next date is the 10th of August. That's this day right here. The next day is going to be the 14th of August. That's this day right here. And then yesterday, or excuse me, yesterday, right? Or today, really, on the daily candle close, the 25th, right? So what do these dates on the chart correspond to? Massive spikes in volume are going to mean two things: market reversal or initiation of a trend, right? So when are we going to have initiation of a trend? We're going to have initiation of the trend around the vicinity of the baseline. Generally, when price is crossing and closing above the baseline, right? Or below the baseline if we're looking at initiating a strong trend to the downside. You cannot have volume or the end of you cannot have a trend without volume, and you cannot end a trend without volume. And you can see that the massive spikes in volume on Bitcoin always come in at the top or bottom of a market or before a trend is about to initiate, right? Before a very volatile movement is about to come. So let's talk about some qualitative differences between these type of scenarios and what they can represent. So the first example is pretty clear cut on the 28th of July. That's obviously the market bottom. And from there, price just went up, right? The volume spike on the 6th of, and I want to point these out. You don't have to be you don't have to be an insanely eagle-eyed trader to spot these. Data.bitcoinity.org, trading volume. Okay. I'll actually post a link to this in the chat right now. Okay. Talked about data.bitcoiner.org before. I think it's one of the best sources out there for external data, for market data. They do a great job. Obviously, we've talked about the bid-ask sum, the bid-ask spread, the combined order book, trades per minute we've talked extensively about as well, although I do prefer the data from Skew as far as some of that stuff goes a little bit better. But for trading volume, I really do like data.bitcoiner.org's layout, and I think that this is very important information. You can just see these very clear outliers, these very, very clear outliers as opposed to the rest of most of these trades. And I mean, these are just clear outliers. These are clear outliers. And if we go over to the chart and we correlate that with where price is at that point in time, again, we can see market bottom, price does nothing but go up. Market top, price does nothing but go down. Market bottom, price moves up. And then today. And then the other example that I excluded was this example right here. Now, this is a tricky one. There's no doubt about that. But I want to put this candle and this candle into context with each other, right? And I would argue, now there's a couple things here. You can obviously see the reversal baseline bounce was a profitable trade. Price does come down right here and tag the baseline, setting you up to catch the bullish reversal for that trade right there. All right. So there's no doubt about that. And I think everybody can see that with pretty clear eyes. We obviously talk about the best places to be entering these reversal trades. If you're going to be taking a reversal trade is at the daily baseline, right? That is the best dynamic area of support and resistance, and where you can be looking to establish reversal positions or add to a position in the direction of the continuing trend. Because if price is above the baseline, then the odds are that the trend is going to continue to the upside. In this situation, I would argue, and again, this is applying some discretion. This is not a clear example of where you absolutely could have nailed it, but the way that I would interpret this is as such, right? Phil says, check those big trading days with moon phase transitions, baby. Hell yeah. Got the moon chart on, man. Is there correlation? That would be very interesting to me. I think there is a moon phase indicator. I'll look at it here in a bit. So we've got this candle is obviously a big volume spike. And what's interesting is that you're not going to get this data from the volume indicator at the bottom, because you can see that this doesn't very clearly line up. You need to go look at the combined volume coming in on data.bitcoiner.org, and you need to combine all this data across the exchanges, because in this example, you can see where the volume really came in on Coinbase, for example. Like Coinbase has an overwhelming amount of this volume that occurred yesterday. Whereas Gemini, a very small portion, Kraken, very small portion, and Bitstamp, even less, right? So we need to be correlating all that. So that's why it's very helpful not to just be looking at the BitMEX chart as far as volume goes. I don't think that looking at the volume on an individual exchange is helpful as looking as combined volume and getting an idea of what the overall Bitcoin market is doing. Not just what's happening with price on this one exchange, but overall what's happening with volume in the market. So when we look at this example, we can see that price is heading down, and then we have a big volume spike on an up candle, but still a bearish Heikinashi trend candle, right? So still a bearish Heikinashi trend. And then price does move violently to the downside. Beautiful short trade. This was a trade that we were short on. In fact, ended up taking profits on this long wick down here, if you guys will recall. Now, remember, two things happen with volume, right? The initiation of a trend or a market reversal. So do I think that today's candle qualitatively looks like a reversal candle or a situation where we are going to be reversing? I really don't. I think that it qualitatively looks different. Now, I can see some similarities, especially if we correlate this candle with this candle over here. We could see the correlation, big volume candle. We go sideways for about 3 days and then a big pump up. And again, I think that's why I've talked about if we end up crossing and closing above that order block area that I've talked about, I'm going to be looking for the long trade, right? I'm going to be looking for the long trade if we can get that 2 hour to cross and close above the current order block that's resting overhead, because then I think that it's more than likely that we go grab liquidity up here in the $11,000 area before then moving down. But again, that is assuming that price will reverse there. It's a logical area for price to reverse, but definitely want to be on the long side of the trade if we start creeping back up above that order block. I just think that's the logical thing to do. Now, we would actually be looking for something a little bit different here. Now, this example would line up better if we had this big volume spike and price move to the upside, because that would be a continuation of the trend, which is basically what I'm looking for here. But the way I'm interpreting this is that big volume spike starting to initiate the trend to the downside. I think that is what is more likely to occur. All right. But I just want to point those things out. I think this is definitely something you should be looking at, because when you see those big, massive influxes of trading volume combined across exchanges, what happens? A big movement. So if you take nothing away, if you take no directional bias away from this, right? If you take no directional bias away from this, right? What this means is that whatever resulting move, whatever signal that Bitcoin gives, I don't think that's a signal to ignore. Now, does this give direct directional bias? I do not think so. It gives trend bias. It gives volatility bias. It lets you know that if you get a system from your signal now, you should take that signal, and you should probably target a farther away take profit. So for example, maybe if you've got 3 take profits, maybe you should be looking at targeting take profit 3 or take profit 2 and being a little bit more aggressive, because most likely price is going to move quite a bit. Now, I think price is going to move quite a bit down, but I'm setting myself up for the movement if price does move up. And I talked about that with protecting myself by keeping my eye on that resistant order block, right? And looking for the cross and close above that. So I think that that's very telling. I think that whatever movement directionally we get out of Bitcoin, I definitely don't think whatever directional signal we get is one to be ignored. And I think the resultant movement would be pretty impressive. And, again, the reason why I'm also bearish to the downside is because even with these big influxes of trading volume, we've also can see this declining curve. Lower high, lower high, lower high, lower high, and lower high. Overall lower high. I think we've already put in the swing high, and I think the only place to go from here is down, right? The weakness of the buyers is evident in its hand. It's evident by price not being able to close back up above in a dominant position. Even this movement over here was stronger, right? This movement over here had the same momentum as this movement right here that we're having today, but we were able to close up in that level. We were able to close at that level over there before the selling started. The selling wasn't even able to make it like beyond a 1 hour candle before the selling started, and pushed price all the way down. So this is definitely bearish to me, and I think that I'm feeling very excited for the opportunity coming up, very excited for the momentum of the trade that's going to be coming up. And if the trade decides to move up, that's fine. We'll take the trade up, right? I already talked about the level. I want to see that cross and close above 10,462, closing above the order block, and I'll take the swing trade up to the $11,000 area. But I still think even if that happens, that is a liquidity grab and the direction is down, right? But specifically setting that trade up now, you run into problems of potentially having that stop it. But I still think the trade now is still to be positioning for that short right now. Okay. So that's enough. I wanted to talk about that trading volume. I think that's absolutely critical to talk about. Now, let's go talk about what's cracking in the cryptocurrency markets. So, MyEtherWallet, guys. I really like MyEtherWallet. It's pretty convenient, especially if you use it securely. MyEtherWallet is what I use with my ledger. If I want to manage any kind of ERC20 tokens, or if I want to manage Ethereum, this is actually how I do it. I use my Ledger Nano X, and I use MyEtherWallet. I actually also that's how I'll do some things. I also like that you can run MyEtherWallet locally. So I've downloaded MyEtherWallet. I run it on my offline computer, which you guys can't actually see on screen. My offline computer, my air-gapped computer, is where I used to keep all my cold storage. I don't keep all my cold storage there anymore because I got my Ledger Nano X, and I quite like that. But MyEtherWallet has introduced a completely revamped dashboard and a new NFT manager. They've made some big changes. So MyEtherWallet is the open source client-side interface for interacting with the Ethereum blockchain. For those of you guys don't know, they have announced some upgrades since their V5 launch back in February, worth taking stock of. Now, the Mu development team has been working hard since the V5 launch, adjusting details of the existing interface while continuing to work on the new features for the Mu version 5.1 release, which is now live. So the new dashboard is the main focus, but they also have a new non-fungible token manager. Mu has also launched this new non-fungible token manager, which currently features CryptoKitties, Crypto Flowers, Gods Unchained, Theramon, and what is that? Criplet something crab? It's an Ethereum game. I don't know. With plans to add more as time goes on. So as this infrastructure grows, the Mu team will be working to make the Mu dashboard a one-stop destination to interact with all non-fungible tokens, right? So non-fungible tokens are going to be basically property on the blockchain, collectibles on the blockchain, everything like that. Now, through this NFT, the blockchain can become a universal and secure way to manage documents related to identity, property ownership, health history, academic achievements, and more. It will be interesting to see how this NFT function progresses with Mu's user-friendly platform, because Mu is pretty much the most popular. Now, obviously I want to point out the security vulnerabilities of Mu if you don't use it properly. So definitely when you go to Mu, don't be logging in with your private key. Don't be logging in with your key store file. You should be generating all of that offline. Never use Mu hot. Never log into your wallet hot. You can use Mu to check your balance. And if you are going to log into Mu on a live computer, i.e. one with internet access, make sure that you're using a Ledger Nano X or some other hardware wallet like that. Again, I think they only have Ledger for their hardware support. They might have Trezor support. I'm not exactly sure. But never, ever log into Mu. So many people have lost money by thinking that Mu is just, it's as simple as logging into Google. It's not. If you generate your hotkey, if you generate your private key online, you're gonna have a bad time, and it's gone. So make sure that you are taking all proper precaution. Do your stuff on an air-gapped computer, or just go get yourself a Ledger if you don't want to worry about stuff like this. But yeah, I've used it. I've checked out the new Mu interface. I think it's nice. I think it's neat. I think it looks very clean. It's got a lot of nice, neat tools. I think it's a really good way to manage your ERC20 tokens or whatever you got going on. But again, just make sure that you're using this securely and responsibly. All right. So now into the news of the day. So Bank of England Governor Mark Carney has proposed a global cryptocurrency. So while speaking to the Federal Reserve Symposium in Wyoming this past Friday, Bank of England Governor Mark Carney described challenges to the global economy in the form of trade tensions and political upheaval. Carney also outlined how globalization and the dollar dominance of the United States leaves many countries and currencies subject to the American financial system, even if they are otherwise economically autonomous. Therefore, given the economic climate of the 21st century, Carney suggested that they consider every opportunity at international monetary reform, including those made available through technological innovation. In his speech, Carney described a synthetic hegemonic currency, an SHC, a digital currency intended to sustain international commerce, which in his words would dampen the domineering influence of the US dollar on global trade. Using Facebook's Libra as an example, Carney made further the point that technological innovation has the potential to disrupt the networking factors which to date have prevented the global reserve currency from being displaced. This is massive. This is massive, and I think this is absolutely telling that the dollar dominance is waning on the horizon. I wasn't expecting to kind of hear of an announcement like this so far, so fast, but the Forex markets are reeling from this announcement today. And, I just want to make this clear. The world has lived under a system of the dollar being the world reserve currency, obviously for as long as I've been alive and much longer. And we can imagine that all enemies and competition to America across the world is excited at the opportunity to see their economic superiority be weakened, right? Now, America would no longer be able to export their inflation through the use of their currency. So, the question is the rest of the world content to subsidize America's debt, right? Now, I'm an American and I'm a proud American, and I know that's a controversial topic, but I want to kind of track this down and talk about how we got to this point, right? I think, and I know this is controversial, but I think that overwhelmingly, for the majority of America's history, the dollar being the world reserve currency has been a good thing globally, economically, all right? It has facilitated the rise of globalization, of international trade. It has given countries, especially developing countries and even first world countries, a stable store of value as they grow their economies. Unfortunately, over the last 50 years, America has weakened psychologically in their commitment to our founding values. And this is something I've talked about a lot. Unfortunately, over the last 50 years, ever since the end of World War II, and obviously, so that's longer than 50 years, but I really want to talk about it. Ever since the fall of the Soviet Union and ever since the conclusion of World War II, we have had a creeping influence of socialism and communistic philosophy and thought from the intellectual field into the realm of government. This has been well documented. The communistic psychological influence or philosophical influence coming over from the displacement of individuals who fled the Soviet Union when the Bolsheviks took power and began instituting all the depravity, all the misery, all the malevolence that they wielded against their populace. So that they were allowed to pretty much do unchecked. It's the worst human rights catastrophe in human history is what citizens of the Soviet Union, people who lived under the Soviet Union, did. The millions of individuals executed, the millions of individuals tortured in the gulags. And people want to whitewash that. But unfortunately, a lot of the intellectuals that supported communism philosophically fled and they went west and they infiltrated Western civilization. They infiltrated Germany and Britain and France, and all of the Western civilization countries came across to America. And a lot of these individuals were upper class. By upper class, I really mean intellectuals, and they got jobs as professors. They got into the educational facilities. They got into the universities here in America and spread that idea of communism, of the evils of capitalism, to largely through the GI Bill, through returning American soldiers from World War II, who now went to college and got, not only did they have to live through World War II and fight for World War II, but now they get inundated with communist philosophy being taught by communist professors. And I think that that's something that there's a lot of research done on this. I know I'm not trying to start conspiracy theories. This is pretty well documented. But again, open to having the conversation. But the whole point is, I think it's, whether you agree with that or not, it's pretty undeniable of the creeping influence of communism and socialism in America coming from the intellectual field, right? Mainly coming out of the universities. And this is just a growth, right? Because you have professors who came in and taught individuals these socialistic philosophies. they become professors and teach a new generation, which become professors and teach a new generation. And it's just why it's spread. It's why it's grown. It's concentrated in certain areas of the United States as well. So over the last 50 years, I would say that this influence has crept from the intellectual field into the government field. And America has been slowly moving itself away from its founding values of free market capitalism, of liberty, of financial independence, of a settlement country, into one of one more inspired by socialistic philosophies of the welfare state, of the war on drugs, of the war on poverty. And unfortunately, this is what we see with a lot of countries before they crumble, right? And I don't think that America is going to crumble. I think we do live in a different climate, in a different sphere, but it's very hard to ignore the comparisons to America and the collapse of the Roman Empire. So the Roman Empire was the exact same way. They were the world reserve currency. They debased their currency. They had an influx. They changed their values. They began buying their citizens' loyalty with bread and sport, and they took on massive debt. They became over involved in external wars and third-party wars in micromanaging their empire. And unfortunately, I've seen America go the exact same way. And I think a lot of this has been the creeping influence. I really disagree. A lot of people, with where a lot of people take this. I do think that it is the creeping influence of socialism. I think that a lot of the debt that America has now exported to the rest of the world really does come from America's debasement of their currency, from the overprinting of money, from the investment on the war on drugs, the war on poverty, the welfare state, unfunded liabilities. Those things dramatically make up far more spending than military budgets, all these other things, these numbers that people throw out. I think it's pretty cut and dry statistics. But, America has really fired up the printing presses and inflated the currency, and the rest of the and they've been able to do that. They've been able to increase their debt and export. They've been able to export the interest on their debt to the rest of the world, who has subsidized America's debt. And I don't think that that's going to be able to continue. I think that the rest of the world sees the weakness of America because socialism is something that rots out the core, the courage, the bravery, the foundation of a country and weakens them. And that's exactly what's happened to America, to where America politically has become largely a joke. I don't think that our politicians act in our best interest. I think that we've really moved into an unfortunate state here in America. I think that there needs to be some really significant changes. And I think that we're going to get pushed into those changes because I don't think that we're going to be able to. I mean, it's just mathematically impossible for us to continue printing more money, going further into debt, extending these unfunded liabilities, providing all of the services that we provide to people, and completely losing our focus on what this country was founded for and what our purpose is. I think that we're really going in the wrong direction and have been for a long time. And it's going to take a big wake-up call for us to make any changes. And I think the rest of the world is going to force those changes upon us because I do think that we're going to lose our hegemony as the dominant world reserve currency. So the rest of the world can see the weakness of America due to our own largesse, due to our overextension, due to our existential crisis over what is America, what does America stand for. We've overextended ourselves, and other countries are eager to displace America's economic hegemony. And I don't think this would have happened under stronger free market leadership, under less misguided ideological leadership, right? I think that we've allowed weak rulers. I think that we've allowed weak politicians. I think that we've allowed weak government. We have weakened the body populace. We have given more power to the federal government, and we have taken power away from the citizens, which is the exact opposite of what this country was founded on. This country was founded on having an alternative, giving power to the people, having control be local, allowing people to live without the fear of government tyranny. That's exactly how this country was founded upon, because every government measure is carried out by force. At the end of the day, it comes down to the gun conversation. Anything government does, it does with a fiat declaration, with a threat of violence looming over anybody that does not comply. Because if the government makes an edict and you do not comply to that edict, they will show up at your place or your place of business with guns and force you to follow their laws. Whereas in the realm of capitalism, free market capitalism, freedom, individuals can only enter into consensual agreements with one another, right? And this is why America was founded on the concept that everything should be consensual and the government should be small enough to drown in a bathtub. And we have gotten farther and farther and farther and farther away from that as the years have rolled on, but really ramped up with the rise of the popularity of socialistic philosophy over the last 50 years, I think. And I think we've caved. I think we've caved to socialist mentality, and I think the writing is on the wall. So, the Bank of England proposing a global digital currency as opposed to the United States dollar as the world reserve currency, I think is absolutely the future. I think just as we talk with corporate coins, I think these things are going to happen. I think they're going to see success, but I think they're also going to throw open the doors to totalitarianism and financial control and scrutiny and more government control and more government power, because digital currency is the future. Centralized digital currency is a nightmare scenario. You are giving all the power and more to a surveillance state, to an entire global structure that is swept up with controlling the body populace in any country you want to talk about, in any country of the first world. And bastions of freedom are becoming smaller and smaller and smaller. And I think that unfortunately, this is going to be a very negative situation that we move into for the entire global populace over the next maybe 20, 50 years, maybe longer. But I think that Bitcoin will survive, will continue to thrive, and will be the shining example of why a decentralized alternative to whatever the central banks want to propose is the better solution, because it takes the power out of the government's hands and puts it back in the people's hands. Money secured by math, not money secured by fiat declaration. So we got a lot of comments on this. Thank you guys so much. Let me scroll up here and just read what we got going on. Philip says, sharing my experience on gold and silver, which like Bitcoin are stores of value priced in dollars. Gold and the dollar are both increasing, unusually, thus suppressing the underlying asset valuation temporarily. Ricky Thompson says, one of your best shows. So much info I'll have to rewatch. Thank you, man, so much. I highly appreciate that. Wendy, is there a Forex watch list for TradingView I can import somewhere? Yeah, it's in the premium drive. It's in the premium start packet, which you'll have access to as a premium member. Just go to the premium start packet and links in the Discord. I've made a post about it in the announcements channel as well, the premium announcements channel. And you go to watch list, TradingView watch list. There's a folder in there and you can download the Forex watch list. Jack says, yep, took over academia, watched the YouTube docs on the Frankfurt School. Yep, that's exactly what I'm talking about. Dances reluctantly says, they always come around as an angel of light, promising great things, ignorant of human nature. They deserve the butt of a rifle. Ken says, the single worst part of it all is an apathetic and stupid public that not only lets it happen, but backs it. Very, very true, man. Thank you, Jai. Jai says, thank you for making another great video. Justin, really makes my day to watch your content. Thank you, man. I highly appreciate that, my brother. JW for president. I mean, listen, I will run on a campaign of completely defunding the federal government. Hi, Justin. Another spot-on argument, but don't you feel that the US of A and the UK will do away with our Bitcoin? You're answering as I tap. I definitely do think that there is a looming threat to Bitcoin. I definitely do think that the government will at some point attack cryptocurrency, attack Bitcoin is really what I mean when I say cryptocurrency. So there definitely is a danger and a threat. What I think the strength is, the Bitcoin network has grown so strong and decentralized that I think that you would need a coordinated global effort to take it out. And I think that, with all the advances that Bitcoin has made, can there be challenges? Absolutely. But I think it could get dire there for a while. But I think that the Bitcoin network will survive, will thrive, will grow past this. It was built to weather attacks like this. I think that we could see significant chunks, but I think the more that people attack it, even if the Bitcoin network takes some big hits and things change a lot from how they are right now, I think that it is going to be the underdog story. I think that it has the power, and I think that people have the willpower and the motivation to thrive. And the more that totalitarian governments crack down and try to control us with these central bank digital currencies, more and more people will look for an opportunity to flee to Bitcoin. And it is something that would grow in black markets around the world. It is something that would grow globally, worldwide, that could be sustained, that could be hidden, even if it came down to the way that it was supposed to be with, let's say that Bitcoin. So right now mining is centralized, right? So what if instead of that, mining, and again, this is a technical argument we could have, but again, what if mining was more like it was meant to be back in the day, where you have millions of people around the world running the Bitcoin protocol on their laptops. So let's say very large mining farms around the world get targeted. Okay, so you're going to decentralize the hash power significantly. And that would significantly change the structure of what the Bitcoin network looks like. But it's definitely a possibility. It's definitely a possibility. Because the nice thing about the Bitcoin protocol is that the hashing algorithm, the consensus algorithm, can be hard forked if enough people agree this is what Bitcoin needs to do to run to survive. Spock Talk says, Americans are more victims of mind control than they are turning to socialism. I think I would argue both, but definitely there is a lot of disinformation, my good friend. Rich Buddy says, the problem with Bitcoin is how can you take 1.2 quadrillion of the world's currency and stuff it into 17 million total Bitcoin? It is not marketable. It is, because Bitcoin is divisible down to the 8th decimal point. So there is, I don't remember the exact math, but I think, what is there, like 3,000 Satoshis for every worldwide citizen? 3,000 Satoshis for every worldwide citizen? Crypto Walk-In Z says, getting premium as a Father's Day gift. Excited. Hey man, I'm so looking forward to trading with you, my good friend. That's why we'll mint gold and silver coins as a companion to a digital wallet, with an eye on making sure you also have this and not just the digital wallet. I think that's good, man. I think it's absolutely good and valid to look into our regular stores of value, our precious metals. Absolutely, man. All right, great topic, guys. Let's talk about the new Binance lending platform. Binance is going to be launching their lending platform, meaning that you can earn passive income on your cryptocurrency deposits with Binance. Currently, they're going to be supporting BNB, USDT, and Ethereum Classic. So absolutely, our aspects like, so this is, your basic, this is your lending club, for any of you guys who are familiar with lending club, this is definitely the future, man. We're going to see more and more and more of this pop up. Now, this is going to be a big alternative to Bitcoin. Now, again, I want to bring this up because just about every single example we've seen of this in the past has been an exit scam. BitConnect, arbitrage.co, Plus Token, all of these things. Hey, deposit your cryptocurrency here, man, and you'll earn interest on it. Passive income, man. Just let your money sit here, bro. They've all been scams. Now, do I think this is a scam coming from Binance? I don't think it's a scam. I think that they might potentially have issues with how it's structured. But if anybody was going to do this, it is Binance that's going to do this. I don't see Binance going away anytime soon, regardless of how many people want to hate on it. Now, this is definitely the future. DeFi coming out. We've already got this for money, and it's just very hard to pick one that's not a scam. I think this is probably the first one that I've seen that's not a blatant scam. So Binance obviously managing it doesn't fill me with a lot of excitement, but it does make me feel a lot better about it than anything like BitConnect or any fly-by-night thing popping up. Now, obviously, this allows you to make interest on using, so you deposit, you buy lots, and that lot, when you buy that lot, they're going to take the money that you used to purchase the lot. They're going to use that as the collateral. They're going to use that to loan out as margin to people margin trading on Binance. So they're taking your money to loan it to somebody else at interest. And they're going to pay you interest for letting them borrow your money to loan it to somebody else. And they're charging that other person more money to take the loan, right? So there is a spread between what Binance is charging the user, the end user, who wants the funds to margin trade. There's a spread between that and what they're paying you back as interest. And they're keeping that spread as a profit. So this is a no-brainer from Binance. Every single major Forex broker does this. They all, any broker, even in stocks, stocks a little bit different, but Forex brokers, they provide you margin and they get that liquidity from investment banks. So Forex brokers take massive loans from investment banks and then they allow you to use margin for a fee, right? And then they make up the difference for that in the spread and the commission that they charge you, right? So this is a well-known practice. This isn't crazy. This isn't like insane. This is absolutely what we were expecting to see. And again, these Forex brokers, they make the difference in the spread between what the investment bank loans them the money at and what they charge you, either through the spread or through the commission or whatever fees they might tack on. Now, obviously Forex, very similar to cryptocurrency, is very popular among traders because the fees are quite low. But generally, if you're trading a dealing desk, there's generally very little commission or no commission. You're just paying the spread. Very similar with ECNs, which are non-dealing desk brokers. Generally, there's going to be a small commission because they're not taking the opposite side of your trade. And we've talked about that as well. I've got a video on that. Does BitMEX trade against you? Explained by a professional trader. You guys go check that video out. It's in the Trading Crypto 101 section. Now, again, as I said, this entire scheme is built to allow you to make interest on making loans to Binance with BNB, USDT, or Ethereum Classic. Now, obviously, what they're doing is they're trying to incentivize individuals to deposit more cryptocurrency onto the exchange. And do I think that's a good idea? I really don't. This does create a dangerous honeypot, and we already have seen how many times Binance's security has warbled a little bit over the last year. Now, as I said, leverage usually comes from investment banks to brokers. And in this situation, we're talking about the leverage, the margin that they're going to be loaning out to margin traders coming from end users. Now, Binance already has a big fund that they're using to loan out as margin, but they're looking to supplement that, obviously. And not only supplement it, but just make money off the spread, right? Just make money off the spread. If they can borrow the money from people wanting to earn interest, they'll pay you the interest because they're making passive income on the spread and it doesn't lock up their funds as well. It's really a no-brainer for them to do this. Now, this is as far as I understand it. The question I asked when I first heard about this is because in the service user agreement, it says Binance lending assets will be used in cryptocurrency leveraged borrowing business on Binance.com. Now, the way that I practically interpret that is that the funds are going to be used, as I just explained, to loan out to individuals margin trading. The one other way that could be interpreted, and I think I'm wrong for trying to interpret it this way, is that Binance itself is going to leverage those funds, meaning you loan them money, they then use those funds as the collateral to acquire more margin and then do what with that money? Loan that money out as margin? I don't think that that's right unless they have obviously they can get the BNB from themselves, but they'd have to have a deal with a Tether treasury, which is not insane. But again, the only way that deposits can come into existence in Tether is if you deposit dollars, and we're not talking about any fiat to crypto on-ramping here. So I don't actually think that is the case. That would be a little bit more extreme and something that's a little bit more worrisome. So now, ideally, this is a passive income solution to provide Binanceans money to provide a margin service. This isn't obviously something that I'm super excited about, especially as an American who's going to be off the Binance platform here in a few weeks anyways. And we'll see if Binance US allows this. I kind of doubt it. So, but we talk about the specifics here a little bit. They're not bad. So the annualized interest rate is going to be 15% for BNB, 10% for Tether, and 7% for Ethereum Classic. So I think what they're definitely doing with this, obviously on the back end, is incentivizing BNB hodlers. They're definitely trying to hold their token price steady. They're trying to flip the standard. They're trying to make BNB, be standalone from the rest of the cryptocurrency markets as well. They definitely want a lot of strength coming from BNB, from the BNB market as well. So, and I don't see this as being crazy. I see this definitely as making a lot of sense. It absolutely, I mean, the more, the more people that hold BNB, the more people that want to buy BNB, incentivizes them and makes them more money as a product, because BNB is their token. So they directly profit off how many people hold that token. So, I mean, obviously Binance really killing the game here, really coming forward with a lot of products and services that we were going to see. I think this is probably the best version of this that we've seen. I wouldn't say don't do this, but I'm also not recommending that you do this. I think if you've got funds on Binance and you're not doing anything with them, for example, if you're holding Tether and you're holding Tether to be hedged against the market, I think it's a no-duh to take advantage of this. I think that Binance would make good on the funds. I don't see anything negative in the interim coming from this. The only danger that this brings up for me is obviously the security flaws of having a lot of your money on the exchange. And so in that same vein, I do not think this is an opportunity for you guys to just rush Binance with lots of deposits, because a creeping concern in the back of my mind would be, Binance obviously has a lot of incentives to increase deposits. And the more that an exchange kind of comes up with ways to increase user deposits, really makes you start to be concerned about, have you guys lost more money than you've come forward with? And if you guys have, just be aware of all the dangers of depositing funds onto a crypto exchange, guys. This is not an opportunity to rush Binance and put all the, if you've got dollars sitting in cold storage, if you got Bitcoin sitting in cold storage, if you've got dollars sitting on the sidelines waiting to invest, this is not a platform that you want to be putting them on and risking all of your savings or a large capital amount to just earn this 15%. It's attractive. It sounds lucrative. It could be good, but it's just too new. It's just too risky, guys. It's just too risky. And it just brings up a lot of red flags, man. So I think if you've got Tether on there right now that you want to have on Binance and you want to earn passive income from it, sounds like a good option. I would take advantage of it, but I would not deposit extra funds on Binance to try to leverage this more. I absolutely would not. And the last thing that we're going to talk about is the 52 million worth of Bitcoin shorts being liquidated. So BitMEX traders obviously got wrecked yesterday to the tune of 52 million liquidations when a $500 wick formed in just minutes last night. BitMEX obviously is the largest margin exchange platform by volume. It's where traders go to get themselves in trouble using a leverage slider that goes to 100. Now, while some celebrated the breakout, others who were highly leveraged in short positions were undoubtedly upset to find their accounts liquidated. Of course, didn't take long for Bitcoin to retrace. In just a few hours, it gave back nearly all of the entire leg up, making the earlier liquidation all the more bitter. So, make sure that you guys, this is just another reason why I so highly recommend individuals to at least check out our Discord, at least check out what we talk about. Make sure you watch the show, subscribe if you haven't already, because every single day we talk about how to manage your position. And last night we were in short positions, completely unaffected, added to our positions, comfortably short, waiting for the big leg down. Check back in with Bitcoin right here, and we'll go back down to that 2-hour time frame. And as I said earlier, what we are looking for, I'll be really excited if we can get some nice volume on a break of this 2-hour baseline. Again, looking for those big trades to the downside. I'm going to be exiting the short position if we crack and close above that 10,462, and I'll be taking the long swing up to 11,000 and potentially looking to go short from that level, but most likely waiting for confirmation. So either way, massive volume. The biggest volume we've had in the last 30 days, and actually longer than that, coming in yesterday, combined volume across all the exchanges, heavily centered on Coinbase. So definitely a huge movement coming up for Bitcoin. I think the trade is to the downside, but just protect yourself. If we start creeping up, we're likely going to creep up with a lot of volatility to grab those stops above 11,000 before moving down. So protect yourself, hedge up, be safe, trade carefully, and whatever you do, follow the goddamn plan, guys. Thank you guys so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise, lead analyst and senior mentor here at CrackingCryptocurrency.com. Thank you guys for joining us. If you guys would like to learn how we trade, if you would like to learn our rules and use our tools, whether you're a new or an experienced trader, make sure to check out premium.crackingcryptocurrency.com. Top link in the description down below to trade more closely with us and receive one-on-one mentorship. We'd love to have you guys in our mastermind community. All right, guys, if you guys love amazing, informative crypto info podcasts, make sure to check out the Breaking Bitcoin podcast. Scott spent many sleepless nights making this thing perfect, and it is available at breakingbitcoin.money, as well as all the show notes for the show, past and current. If you want to see the links to everything we talked about, if you want to get links to all the podcasts, whether it's Podbean, Stitcher, Google Play Music, Google Podcasts, iTunes, it's all at breakingbitcoin.money. Make sure to check the podcast out. We highly also appreciate a 5-star review over there on iTunes. May not mean a lot to you, but it definitely helps us out with the Apple algorithm gods. Also, make sure to hit the thumbs up button on your way out, guys. Helps us out with the YouTube algorithm gods. And leave your comment down below for a chance to win 85 X42 coming in for tomorrow's show, guys. You guys have been fantastic. Make sure to trade safely, and I'll see you guys tomorrow.